two elements here that I think are important. The first one relates to the submission of the audited accounts, or rather the audited accounts which are supposed to be submitted to us by the end of March of every year, meaning the previous year's accounts audited. We are familiar with that. And in this particular case, actually, as we stand now, all banks have already made their submissions. So they are supposed to submit by the end of March, and they've all done that. Actually, some did a little earlier, as you know, and published them in your own newspapers and so forth. And others, as things got completed closer to the end of March. So in this particular case, yes, there was they had an auditor, Deloitte, and this particular auditor had gone through the various documentation. Remember, this time around, there are two specific things that banks were that we had requested that auditors were supposed to do. There is a standard statutory requirement, and then, of course, we had asked them to interrogate the IT system and give us an opinion with regard to the integrity of that. And what then happened with regard to the statutory requirement? The auditors, in the end, issued what we could say the qualified opinion. And this is a particular class of, or in a particular class, which is the disclaimer of opinion. So it's called. I'm not an auditor, and I've had to learn these terms like all of you, so non-auditors, so we can understand each other. But I guess the point here is that, I mean, just in summary, what happens is, with these matters, is you generally will have unqualified opinion, clean opinion, or clean financials, where the financials, according to the auditor, represent the true and fair position of this institution. So that's one level of things, which is unqualified opinions, and this is what we generally have. You see more often than not, particularly for banks. And again, this is done according to the IFRS, which is International Financial Reporting Standards. So the auditors are supposed to do that. The other one, of course, is a qualified opinion. And the qualified opinion, you do have two levels, which is one of them is the disclaimer of opinion, which means that the auditors are unable to give an opinion about whether these accounts actually are true and a fair reflection of the reality. And that is obviously a problematic issue, and this is where this particular bank's accounts ended up. Now, there is also the other one, which is emphasis of matter, which relates to that the accounts are fair, but in a particular area there may be a question, and they outline what the question was. I wanted to say that to explain that actually when the auditors gave this qualified opinion, the disclaimer of opinion, it was something that was surprising to everybody looking at it. But again, you have to realize that the accounts are not done by the auditors. The accounts are done by management. It's management and the board, approved by the board, and then presented to the auditors or presented to, after any changes that the auditors may suggest, they can be presented to, as in this case, the central bank. I say this really to emphasize who is in control in terms of the accounts. It isn't the auditors. It is the auditors have a specific function, and indeed everyone else. The auditors are providing a service in terms of assessing whether these audits are fair and so forth. Be that as it may, what happened in this case is that there were two major concerns. There may be others here and there, but I think there were two major concerns. And this are related to the inability to, let's say, lack of evidence in terms of recoverability of loans relating to on the amount of 8.7, and this also relates to some, or there is also another set of loans related to insider lending, which is unsecured to directors of something like 1 billion, and also other lending to entities owned by the directors, something in the order of 6.9.
Excuse me.
Thank you. That's good? Okay, thank you. So in all, you have something in the order of 16.6 billion, which the auditors had some serious concerns with. And that's why they had qualified opinion on these accounts. Now, in a typical sort of setting, what would happen is that the management would accept some of the changes that are recommended by, or accept the changes that are recommended by the auditors, and then sort of subsume them in the accounts as losses or whatever else it is. But in this case, at least at that point, they hadn't done it. And this is what then was revealed to all of you, because these are posted on their websites and so forth. I'm sorry for belaboring it, but I think it is important to appreciate how the accounts are put together, and indeed why the accounts are that important, and the rigor with which the accounts are done. That said, the bank had for some time now been under pressure, meaning not, let's say, it didn't have all the elbow room that it would need. Remember, we work in a fractional reserve sort of system. When you put in your 100 shillings, well, it's lent out to 5 people. And so your 100 becomes 600, you and everyone else, fractional reserve. So the point here is that the bank needs some sort of space or some room in terms of so that they can provide whatever deposits are called for at any time. I think this is standard. But the point is that since October, we know that there has been some sort of concerns, and indeed a lot of banks had, or some banks had narrow margins to maneuver. And it was obviously because of some aspect of this related to the change in the environment that took place around that time. Credit lines were cut to some particular banks and things like that. But I think also we need to be clear that it related to another issue, which is specific statements that were made indeed through WhatsApp or through other things, which led to some sort of, let's say, fears, and indeed fanned the fears of depositors, and they ended up moving their deposit out from one institution to another one. We'll come back to that in a minute. But I think the point I want to make here is that when this happened, meaning the audit opinion, in this case the adverse opinion or the qualified opinion came through, not only did this sort of cause some concern, but again, remember there are other banks and other institutions, but in particular banks that actually posted large losses. But in a sense, it was understandable because they were actually cleaning their balance sheets and posting, and now being able to move forward once their balance sheets were cleaned up, which is what was happening. The non-performing loans were being recognized, they were providing for it and so forth. So these were all good things. But what then happened is, of course, at the end of a few days ago, there were concerns related to the additional concerns related to some statements that were made in social media. No, yesterday I made this point that none of us have a right to shout fire in a crowded theater, and frankly, this is what happened. You did have some individuals, call them what you may, that actually did shout fire in a crowded theater. I'm sure some of them did meet those things. And to me, there's nothing that can be more reckless than that. Because you know, no bank in the entire world can sustain pressures of everybody running out of the export, trying to get their money at once. No bank, not a single one, because it is related to the fractional sort of reserve framework that banks operate. So no bank has all the deposits ready 100%. No, it doesn't. It's actually 20%. So if 4 of us or 5 of us try to get it, only 1 of us will get it. So in that sense, it's clear that if one made such horrendous statements, yes, you can cause a run and you can cause a crisis. So this is actually what happened in terms of the sequencing of things. And indeed, yesterday, the bank was under pressure, came under serious pressure. There was a run on the banks, as we said in our statement. And clearly, the bank could not sustain this loss for an extended period of time, and we'll come back to that in a minute. Now, on the background, it's not that things have been stationary. We've been working with this bank, to strengthen its position, meaning to have additional liquidity. And as a matter of fact, I need to say that the shareholders, some of them are external shareholders, institutional investors, have been here. I met them, for instance, on March 30th, before all these things happened. And, or rather, we met them in CBK on March 30th to explain to them the sort of things that they need to do and to explain to them as they understood the seriousness of the situation and the urgency of bringing liquidity back, into the system. Mind you, we've been talking to the bank in general and specifically to the CEO and others as they, over the last few months, as they sort of embarked on a path of, on a journey to increase their resources in the bank. But in this particular case, the hemorrhage was so large that at the end of the day, the bank could not meet its obligations. That's really the issue. And a bank that cannot meet its obligations cannot sustain. As simple as that. Now, there is the question, okay, what did you do then? As I said, we have been talking with the shareholders, and we don't wait until the last minute. We've been working with this, and we are working with all 42 banks in all sorts of ways, at different levels. And I think the point I want to make here is that, yes, we knew that the shareholders would be instrumental, to bringing resources in, and we have been talking to them. So actually, yes, so yesterday we got in touch with them multiple times during the day. Frankly, I cannot count how many times. Yesterday, I personally spoke to the CEO and others on these particular issues, because indeed it was clear that the pressures were large. At the end of the day, we of course have our mechanisms, but to support the banks under certain rules. And in the end, it became clear we couldn't use those mechanisms because the rules that applied, that we could have used, do not apply in that case. And secondly, the other thing we tried to do is to get other institutions, partners, this is all yesterday, to support this bank in various ways. Ladies and gentlemen, yes, we spent all of yesterday and all of last night doing this, negotiating on this, trying to see how you could get this situation back on track. And we were all disappointed just before 4 o'clock this morning when it became clear that that path was no longer tenable. And at that point, we had no choice, because the institution is a bank. This is not your mom and pop store. This is a bank, and so when it cannot meet its obligation, the rules are clear. It needs to be put in receivership. Again, we're using the Banking Act and also the KDSE Act, but the point here is that at that point, you cannot let the bank continue unabated or uncontrolled in this case, and therefore that's what we did. So we put the bank in receivership. I want to come back to the issue of the discourse, responsible discourse. I know I made this point yesterday, but I think it is important to say it again. Really, it's unfortunate that there are people who cry fire and are happy when things go down, when things crash and so forth. And these are inaccurate information. Now, granted, they could say, well, but we told you so. Exactly, and I think that's the issue here, that there are people who cry that there's fire, and of course there's no fire, or they create the fire, and when the fire turns out, they say, yeah, I told you so. You've seen it on Twitter, you've seen it on Facebook, you've seen it maybe WhatsApp sent to you and so forth. I think this is something we need to take seriously. I should also tell you that, yes, we take it very seriously. And when, back in October, I think we said that after Imperial Bank was put in receivership, that was a particular shock to the system. But as I have said before, that the greatest shock to the system was not that. It was actually the WhatsApp message that was sent the next day, I believe it was the next day or maybe that evening, naming 21 institutions or 22 institutions and saying that these institutions are going to face the same fate as Imperial Bank. That was the largest shock. That was much larger than the Imperial Bank itself. I have told you before that, yes, we will make sure that these people are brought to, that they are held to account on these measures. And I can actually say here in summary that, yes, we have filed or appropriate documentations have been filed to arraign the suspect that actually was behind this back in October. Yes, it's taken this many months. Justice doesn't always grind quickly, but at the end of the day, yes, we will make sure that people are held accountable due to such malicious things. Let's move on. What is important here? I think there are several things that are important. It's important to think about the depositors in the specific institution. I think I made this point before in the context of the Imperial Bank or other institutions, where, yes, the depositors are actually front and center of what we do in this context of receivership and so forth. So that's one, and that will not change. At the same time, there is the issue of the financial sector. That is part of our mandate, to protect the financial sector. And yes, frankly, why are the rules such that when a bank cannot meet its financial obligations, it's put in receivership precisely to protect the financial sector. So that's really the mechanism in that particular case. And from our perspective, we are unwavering in terms of our discharging our responsibility of protecting the financial sector. We believe that is something that is, that's the basis of all the things that we do. And yes, there'll be decisions we may make in the future, but all of them are directed in this area, protecting the financial sector. I want to say a few things about the way forward, how we see this thing moving forward. And but before saying that, I can also tell you that once we decided at 4 o'clock this morning that we need to move in this direction, it's not a simple thing as just flipping a switch. It's a little more complicated because there are 62 branches. We need to be there before they open in all 62 places. So we need to, so you can imagine, it's a bit like a military operation. We need to have people in all those jurisdictions with instructions, and that will make sure that we'll actually take over the building, the institution, and so forth, headquarters, and so forth, take over the IT, and so forth. So it's much more complicated than just, a little decree that the thing has been put in receivership or whatever. But that notwithstanding, what is clear is that the way forward will follow these two directions that I mentioned, the depositors and also protecting the financial institution. But I think the point I would make is that we had, as the shareholders were leaving this morning at 7 o'clock actually, from my office, or from my boardroom, we had a conversation, a sort of exit conversation. And of course they expressed their disappointment that they were unable to provide resources that would maintain would keep the bank running afloat, keep the lights on, as you may. But I think we had a good discussion, and they expressed their unwavering commitment, as they expressed it, to provide resources that would, as quickly as possible, that would allow the bank to be reopened. Now, that means that, yes, we will do what we need to do. We need to have a sort of a statement of affairs and so forth. But our expectation is that the shareholders will actually put together, bring liquidity to the institution, which would allow it to be reopened.